Meantime, we've got a new round of trade talks scheduled. U.S. and China negotiators will be meeting in Beijing next week, aiming to close a deal by the end of April and put an end to a year-long dispute. The following week, negotiators are expected to continue those talks in Washington. No word yet on any kind of final meeting at Mar-a-Lago. Joining us now is Eurasia Group U.S. analyst Jeff Wright. Jeff, thank you so much for joining us. You're down there in Washington. So, is this a positive sign here? Because we've been getting a lot of conflicting headlines over the past couple of days, even with these meetings set up.
Sure, I think it's broadly positive. I mean, it's certainly not enough to say that the U.S. and China are certainly headed for a deal, but I think it's a good sign in that direction. There are some issues that they still need to work out, and the fact that they've given themselves 2 full negotiating weeks, one in China and one here, I think is a good sign that that both sides at least are committed to working on those issues. You know, no guarantees, but I think it's a good sign.
But one of those issues is enforcement. How do we enforce the potential deal over intellectual property and transfer to China? And President Xi is his back is up against the wall. He can't give in. So how do we get past that?
My guess is that where you come to these issues where it's going to be difficult for the Chinese to give in, but will be essential for the deal, that Trump will instruct his negotiators to give as much ground as is necessary to get the deal. I think Trump is very interested in getting this deal for a variety of reasons, political and economic, and I don't think he's going to let the sort of details stand in the way of that. So, you know, on the specific question that you mentioned, whether the Chinese would agree not to retaliate against potential U.S. tariffs, I think it's possible you could see the parties sort of agree to disagree in the language of the deal, that those issues would be handled on a case-by-case basis. And really, when it comes down to it, the U.S. doesn't especially need Chinese to agree that they're allowed to add tariffs. If they feel strongly enough, if the Trump administration or some future administration feels strongly enough about it, they can just go ahead and do it, and the Chinese reaction will be determined at the time. So I think what's important, certainly to the Trump administration right now, is to get the headline deal. And all of these implementation challenges will come into the picture, but probably not for a few months yet.
Hey, Jeff, Scott Gam here. We've been talking about the weakening economy in China for years now, but how much is the more recent weakening attributed to the trade tensions between the U.S. and China? I mean, is it really about trade, or is China's economy just on track for a slowdown, as it has been for the past, 5 years or so?
I think trade is certainly a part of it, but I would put it on a list of factors that are slowing the Chinese economy, the most important of which is the sort of deleveraging campaign and trying to get bad debts out of regional banks and governments. So, you know, I think trade is certainly a big issue, and it's particularly a big one for provinces in the south and east of the country that are hugely export dependent. But, you know, the Chinese, I think that it's clear that even if we were to get a trade deal in the next few weeks, the Chinese economy would not suddenly roar back to 6-7% growth. I mean, the problems are clearly structural and have to do with the maturing, I think, of a Chinese economy that's trying to grow into a more consumption-based mode, away from, the sort of investment-reliant place that it's been for the last 10 years.
Jeff, there is another solution perhaps to enforcement and tariffs, and I'm not going to ask you to comment on what's happening in Germany, but they reportedly are planning to pass legislation there that at the end of 2019 they'd create some kind of state-owned fund that would then protect German-based companies from Chinese takeover as well as Chinese intellectual property theft. Is that something here in the States? I mean, it's anathema to everything we believe about free markets and capitalism, but is that something that the administration should be looking at doing, a government-backed fund to protect U.S. companies as part of this deal?
Yeah, I don't think, for the reasons you mentioned, I don't think it's politically realistic in the U.S. In an interesting way, it is something that the Trump administration has already addressed in some ways. So the passage late last year of FIRMA and the Export Control Act, both of these are intended to strengthen the CFIUS process to review potential Chinese investments in U.S. businesses, as well as to limit the outflow of U.S. intellectual property, even through existing joint ventures in the case of ECRA. So I think in some ways the U.S. has already sort of tightened some of the regulatory levers that it has here, but that sort of direct investment approach that the Germans are considering, I don't think would ever make it through Congress.
All right, Jeff, thanks for your time. Jeff Wright is a Eurasia
Thanks, guys.
Group U.S. analyst. Appreciate it.